Hey guys, it's Mark Coe for the 4th of June, just the second day of the week here. Just wanted to take a look and talk about a few things in markets. I know some markets have been a little quieter in late afternoon. We had some spike this morning, but just kind of wanted to talk about a few things we're looking at here. So we have maintained a euro long position uh, since Friday. It was late Thursday evening US and early Friday morning in Asia. So we've had a long euro position on since 111.35 and we maintain that. The only trade we got on today that was intraday was an additional euro trade, and we got it on right where did I get it on? 1237. And unfortunately, so what happened here is we got a spike and then I raised stops on an intraday basis. So I had two positions on today. Um, the pullback into the lows got me out of the intraday, but we still maintain the long euro position. And as I said from Sunday, so I laid out this framework on Sunday of shorter dollar preference across the board, and it's played out. At the beginning of the week, we continue to hold these positions. We hold euros, we hold pounds from yesterday morning. Pound has not been a big mover. Our entry yesterday in the pound was 27.16. So again, not been a big mover. I think at best levels today, the highs were like 14. Yeah, so pound has some work to do. So if pound's going to actually make this be a nice move, we got to get above this 27.5 level. But what I wanted to look at is the ability to look longer term and look at these from the standpoint of where your edges sit, where your advantages are in playing these bigger picture levels. And we've had some great discussions this week with some of the folks in the room with the preference of a lot of retail traders that I speak to wanting to deal in the shorter term day trading mentality. And no problem with that. But what I do want to show is here's what I laid out on Sunday evening. Crude oil. Crude oil is one example. Looking for a bounce in crude oil. Now this is Sunday morning when I'm doing it. We get into a Sunday evening sell-off, which creates bottom edge. Right there's your bounce on Monday, right back to the same edge. Now, so what you're trying to lay out here is where are the edges that you can define, even if you're a short-term trader, tight risk versus larger reward. And so knowing that you're walking into the week looking bigger picture bounce, that's what you're looking for. You start to define those levels. So as you get down to tighter and tighter term, I understand it's a very challenging look to take somebody that's used to scalping and day trading and say, hey guys, you need to focus on longer term charts. But let me show you the benefit of looking at those areas. So when you can diagnose the spots that the market will actually rally from, well then the beauty is, right? So when you can find the spot, and this is the rally, basically Asian session on Sunday evening, right? Rallies up a couple bucks. It's the pullback into that level that then says, okay, that's the area where you want to concentrate on your scalp longs. Very similar thing we did in the E-minis. The E-minis were diagnosed as a bounce area down into 27.25 to 27.35, and it came from here. I talked about this yesterday. So what does that make sense to do? It makes sense to then look for short-term buy opportunities against that bottom edge. This is what we did in the room all day yesterday, right? Looked at these levels and said, guys, we're sitting right there at the same level. You're sitting at the same level. How do you not buy this? Well, watch the rotation. So this is the beauty of the longer term analysis used on a short term approach. Okay, so price trades down to your 27.35, rotates to 59. That's a $1,200 per contract move. Rotates back down into the 30s. Rotates 63. Another $1,200 move. Same move. Same move. That was 4 times before you see the upside this morning. Everybody's going to be talking about the upside this morning, talking about Fed Chairman Powell saying he's looking at potential of rate cuts. But nobody's going to be talking about that bottom edge was in play and called out by me on Sunday well in advance. So you had nothing but time and opportunity. I told the guys in the room this morning, I said, today's not the day to be aggressive chasing it. This is before the Fed chairman's comments. But yesterday, when you were sitting at the bottom edge, that was the time to be aggressive with it, and all it did was pay you yesterday, right? Same deal, same deal. So, anyway, I hope you guys are having a decent week or a decent start to your week. And I think you really got to take a look at this bigger picture stuff to really hone in on your short-term levels. You're not going to see a lot of damage done when you're wrong, but you're going to see a massive amount of profit when you're correct. So, cheers, guys, for a Tuesday, and we'll chat with you soon.